Hello, everybody. It's Leighton back for some more finance on YouTube. So, we're going to start today off by talking about IPOs. So, an IPO stands for Initial Public Offering. Do you remember shares, the small ownership bits of companies that we talked about in the last video? Okay, that will be important, so you have to know what a share is. So, an IPO is an event, or a day, when shares of a company can be bought and sold by anyone, less the word public. Okay, let's start from the beginning. When people start companies, or startups as they are called, most startup leaders want to make their investors and employees have a stake in the success of their company, make them partial owners. And the best way to do this is to give them shares of the company. But startups are hard, and as the company tries different things, builds products, fails, tries again, there's a lot of uncertainty about the idea. And so because of the unknowns and uncertainty, there's a lot of risk to these startups. And so it is difficult to find people who want these risky private shares held by the startup's employees and investors. In other words, there's no buyers, no market for your shares. So without buyers who want your shares, they are, well, technically worthless. But wait, all is not lost. At some point, this startup starts to figure things out. The product works well, customers like it and pay regularly for the product, and the business is much more mature with less risk. So at this point, the company leadership may want to do two things. Number one, it may want to raise more money to fund future growth, say expand into South Africa or build a weird electric truck. And number two, it may want to allow trading, buying and selling of its shares to the general public so that the company's employees and investors can finally sell their shares and make their paper shares worth something. Remember, if there's a buyer, there's a price, and thus value. So, to accomplish these two goals, the company will do an initial public offering, IPO, meaning the first time the shares will be able to be bought/sold and traded in the public. The public meaning the stock exchanges. So to do this IPO, there are a lot of lawyers and bankers and big money managers that are involved. And startups that want to do the IPO go around and tell all these money managers and potential public share buyers about their company and why they should participate and buy on the IPO date. This process is called a roadshow. And after the roadshow is done, the bankers and company decide on a date to go public. They also decide on the ticker symbol, which is the abbreviation for the company's stock. And on the IPO date, the company's shares will be priced at some level, determined by the interest from the money managers during the roadshow, and the bankers will let loose these shares at the determined price. And it's done, your IPO. So, ultimately, this IPO helps the company go public and get a lot more buyers. Thank you guys so much for watching. If you have any other video suggestions, leave them in the comments, and make sure to subscribe and leave a like. Thank you.